And the following show are solely those of the hosts and their guests and not those of W4CY Radio, its employees, or affiliates. We make no recommendations or endorsements for radio show programs, services, or products mentioned on air or on our web. No liability, explicit or implied, shall be extended to W4CY Radio or its employees or affiliates. Any questions or comments should be directed to those show hosts. Thank you for choosing W4CY Radio.
Barry G. Fowler, EA, brings you Tax Talk for You right here on W4CY Radio and Talk4 TV. As an enrolled agent and a national leader in tax resolution, as well as trucker, bookkeeping, and tax planning with over 30 years of experience, Barry will break down taxes, bookkeeping, tax planning, and tax relief for individuals and businesses just like you. So let's have some Tax Talk for You with your host, Barry G. Fowler.
Good morning and welcome to Tax Talk for You. I mean, we enjoy these Monday mornings with you, getting to talk about, taxes and bookkeeping and tax resolution and solving your IRS problems with taxationsolutions.net tax relief. This morning we're going to be talking about, basically IRS updates. What's happening in the IRS? What are they concerned with? What are they looking at? And how can we help you navigate the problems within the IRS? And, one of the latest updates, and we've been seeing this because we've seen people that have come to us with these nasty IRS letters about the employee retention credits. And, there's been a lot of problems with the ERC, employee retention credits, that are out there that the IRS paused giving money out for it because of incorrect claims that are out there. There's a lot of companies that are professing to get a business, tens of thousands of dollars back. And, we've seen it. We've had a couple of clients that came to us and said, hey, can you process this ERC? And we said, well, we can do an analysis first to see whether you qualify. And if you qualify, then yes, we could do this. And basically we ran the compliance check, and one of them was a daycare center, and we were going through and doing the analysis. The daycare center actually never slowed down, did not have a reduction in revenues during COVID, or all the areas you had to show to be able to get the ERC. And they doubted us and went to one of these promoters of the business to get the ERCs, and they got an ERC. Well, now they've got the nasty grams from the IRS, those letters that said, hey, this was incorrect and you owe us this money. And another one was a trucking company. And in trucking seemed to be that industry that picked up during this time. And many trucking companies were very, very successful, owner-operators out there, even in transporting goods and increasing revenues and everything. And these guys did not in any way, shape, or form qualify for the employee retention credit. But yet the promoters said they would. And so they went to the promoters, and now they owe over $100,000 back from this employer retention credits. So, if you filed for the employee retention credits, you need to make sure that everything was done correctly and that you truly qualified. The IRS has got compliance teams out there, and, they're looking through and checking everything to make sure that you as a business, qualified. And, some of the things that they were looking at, if you were an essential business during the pandemic that could fully operate and didn't have a decline in gross receipts, you shouldn't have filed for the ERC. Promoters out there have convinced many businesses to claim the ERC when in many instances you don't qualify. You weren't eligible. Your operations weren't fully or partially shut down or suspended by a qualifying government order. So you've got to really pay attention and ask the questions. Sometimes these people are out there promoting these things, knowing full well they're going to get their fee, which is generally, in some of these instances, they were taking 20% of the ERC credits. So where they're getting you $30, $40, $100,000 back, they were getting that $20,000 up front from you. And now guess what? They're no longer in business. You can't find them. There's nobody out there to hold accountable for it. And when you signed everything, you signed it testifying that under penalties of perjury, this is correct. So, it's a real problem out there. A lot of times you had family members who were wage earners, and they use them as qualified wages, and that should not have been. Those were filed incorrectly. Like if your spouse or your child or a descendant of a child, brother, sister, stepbrother, stepsister, father, mother, niece, nephews, these are all family members. And, they could not be included in those wages. Or, the wages were already used for the Paycheck Protection Loan forgiveness. And, if you've gotten that as well, then, you didn't qualify. So, really got to sit down and look, did this work? We've also seen where these guys have claimed too many quarters. And basically, they urged the employer to claim the ERC for all quarters, that the credit was available, thinking, hey, whether you qualify or not, they're going to give you this money and we don't care. They're not going to come back after you. They are. Some of these promoters were out there saying government orders, and government orders didn't apply to you or didn't qualify. So they claim that the ERC, if any government order was in place in their area, even if their operations weren't affected, or they choose to suspend their business operations voluntarily, then that ERC claim would not be correct because it wasn't under government orders. And the government order had to be due to the COVID-19 pandemic. So, you got to really think, what is the correct thing for you and your business in claiming this ERC credit? I couldn't reiterate enough the problems with the ERC credits and the problems with businesses claiming them when they didn't qualify. And yes, now the IRS is coming back and saying, hey, you've claimed too much. You shouldn't have claimed. You don't qualify. Whatever the case may be. And guess who's left holding the bag? You are. And also, some of these people didn't go back and amend the tax returns that were required to be amended because you got this ERC credit. And now maybe you did go back and pay the taxes that were owed for that year, to 2021 or 2020 when you took this credit, and you paid those taxes. Now the IRS is coming back and saying, no, don't qualify, and you've got to repay the tax that you got the refund from. And then you're going to have to go back probably and amend that tax return back to the way it was because you shouldn't have gotten the credit. Man, you talk about triple-edged sword. You seem to be getting it coming, going, and sideways. And where that needed to stop was not making the decision to do this ERC credit. But if you need help on this, we're working with clients right now to help solve their tax problem from claiming fraudulently this ERC credit. Now, there's ways to beat the IRS and stop the IRS, such as a withdrawal of the employee retention credit claim. And doing that could help solve the fraudulent claim responsibility that you would be in. So if you need help for the ERC, don't let the IRS walk all over you with this. You're going to have to do everything you can to stop the IRS now. So give us a call at 888-930-1016. Again, 888-930-1016, taxationsolutions.net, to see how we can help you stop the IRS or withdraw your employee retention claims. Let's get these things done before you have that problem with the IRS. One of the big things we heard too about these promoters, they continue to talk that there was nothing to lose. They urge you to file this claim because you have nothing to lose. Businesses that incorrectly the ERC risked at their expense, the employer's expense, not the promoter's expense, the repayment requirements, penalties, interest, audit, potential expenses of hiring someone to resolve the incorrect claim and amend the previous year's returns and now re-amend them. And if you willfully filed a fraudulent ERC claim or you assisted or conspired in such a conduct, withdrawing a fraudulent claim will not exempt you from potential criminal investigation and prosecution. Hey, we're going to take a short break here. When we come back, we're going to talk about how to withdraw an employee retention claim, ERC claim, right after this.
We have only scratched the surface of today's show. Please stand by as Barry G. Fowler will be right back with Tax Talk for You. If you owe the IRS or are going through an IRS audit, don't go at it alone. Call Taxation Solutions Tax Relief at 888-930-1016. We are your solution for IRS debts, audits, back taxes, garnishments, liens, and levies. Whether you're an individual or business, you need a solution and a strong, aggressive tax resolution. Don't let the IRS walk all over you. Stop the IRS now. Call 888-930-1016 or go to taxationsolutions.net now for a free, no obligation consultation. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. Talking about the ERC, employee retention claims that small businesses have filed and now getting nasty grams over, and how to stop the IRS at least a little bit by withdrawing that employee retention claim if it hasn't been paid or even if it has been paid. But first, we got a question here, and we love questions. So if you got questions, send them into the studio, and we'll get those questions answered for you as well. Rick here was asking if both my wife and I are W-2 employees, can both of us claim the dependents on the W-2? Well, what you're doing is actually filling out your W-4 with your employer. Go down that form and answer the questions out there. No, I probably would not put the dependents on both W-4s. One of the things that I would work with is if you've got a tax preparer, work with them that have prepared your return to make sure that you've got the right withholdings for your W-2s. Now, the right withholdings is not where you're going to get a large refund next year when you file your taxes. You should be at the break-even point with the IRS. There's no sense in giving the IRS more money to sit and hold and not pay you interest on. And you can keep that extra money instead of paying the IRS, $1,500 or $2,000 extra. You could have that money in your account earning interest and saving that money, and you would have more than the $2,000 or the refund that you would see coming back if you put that money away. And that should be your goal, is always trying to find a way to save money, build your nest egg for your future, or saving money. If you're going to use that money for something like a trip or something, you set that aside in your own savings account, don't touch it. And then you've got extra money on the trip because you've been earning interest on it every single month. So that's my advice, is work with your tax preparer. Make sure that W-4 gets filled out correctly for both your wife and you, Rick. And then if you're at break even, instead of getting a large refund, you can put that extra money away. Withdrawal of ERC claims. And that's what we were talking about, is how do you go through and withdraw that claim? So you filed it incorrectly. You were convinced to file this and you want to withdraw it. First, work with your tax consultant. Let's talk to them. Make sure that if this claim was filed fraudulently because some promoter talked you into it, get with your preparer and get them to help you withdraw the employee retention credit. And they should be able to check out whether you did qualify or not. And, if they determine that you didn't qualify, or you determine based on the certain rules that you don't qualify, then you can go through the withdrawal process. And this is if it hasn't been paid yet. So, or if you received a check, but you didn't cash it or deposit it, you can then withdraw your claim. You're going to ask the IRS not to process your entire adjusted employment tax return, which is the 941X, 943X, or 944X, for the period that you claim the ERC. Claims that are withdrawn will be treated as if they were never filed. And the IRS says it won't impose penalties or interest on this. So if you didn't cash the check, you didn't make the deposit, or IRS is still sitting on it and hasn't processed it yet, it's a good time to withdraw it. So if you made any other changes on the adjusted employment tax return, you only need to reduce your ERC claim, not withdraw it entirely. You can't use this withdrawal process. Instead, you just need to amend that 941X or 943, and you can correct that there. So if they included family members on your ERC claim or your pay on the ERC claim, you can amend your return and just put it for the other employees that you had. Or maybe you got partial paycheck protection program, PPC. You can not withdraw, but you could amend for that as well. But if you hadn't gotten paid, withdrawal is for you, or if you're sitting on the check and you didn't cash it or deposit it because you started getting nervous about some of this stuff and whether you qualify or not. So, if you're going to withdraw the entire amount, you can actually take that 941X and write withdraw on the left side margin. You can also put your name, your position with the company, your signature, and the date on the right side of it. That way you've got your signature on it, you have withdrawn on it, and then you can submit that in and the claim will be withdrawn. Now, if in the meantime you receive a check for this, don't cash it. Just write void on it so you don't have to cash it. And one of the big things is if you have the check, you write void in the endorsement section on the back of the check. I would write void across the front. A note that says ERC withdrawn and return the check to the IRS. Now I'm going to tell you, IRS is known to lose things. Make a copy for your records of the 941X, the voided check that you returned, and any notes that you've sent in with this to withdraw this. The IRS always tells you don't staple, bend, or paperclip the voided check. Just include it with it. Then you mail it to the Cincinnati Refund Inquiry Unit. And I always tell you, no matter what you're sending to the IRS, if you're putting it in the mail, do it with tracking. And then wait. Because the IRS is going to send you a letter telling you whether your withdrawal request was accepted or rejected. Your approved request is not effective until you have your acceptance letter from the IRS. And then, if your withdrawal is accepted, you may need to go back and amend your tax return again. Amendments. See, it seems like this whole scheme that you fell for is causing you to do nothing more than continue to amend your tax return or deal with problems that this caused. So, you're going to have to take the time to dot all the I's and cross all the T's and make sure that you have got these items correctly. We got a question here from Jeff. I ran a trucking company during COVID. Would I qualify for the ERC? Well, Jeff, there were a lot of different rules for ERC. Depending on your business and what happened in your business, you might qualify for the ERC. It's an analysis that actually you need to go through to determine each of the periods and how your revenues were, what's your employment level, if you have employees, if it's just you, and whether you got the Paycheck Protection Program. So you may not qualify for this. But if you've got employees and you kept them working and you were shut down, maybe you do local deliveries and weren't able to do the work, you might have qualified. Something we've got to sit down and look at. We're coming up on a break here. When we come back, we're going to talk about the IRS sending letters, ERC, 1099K. Audit letters and problems, and we're going to do that right after this.
We have only scratched the surface of today's show. Please stand by as Barry G. Fowler will be right back with Tax Talk for you. As an owner-operator, you already spend too much time away from your family. Trucker Tax Tools handles all your bookkeeping and taxes no matter what level trucker you are. Life on the road can be taxing, but that doesn't mean that your wallet or time with your family should suffer. Trucker Tax Tools makes your life run smoothly. Go to truckertaxtools.com for a free guide that will give you the tools to never worry about your taxes again. Call Trucker Tax Tools at 877-966-2477 or go to truckertaxtools.com now and let the experts keep you trucking. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. IRS right now is continuing their efforts to combat fraudulent claims for the employee retention credit. And you may have gotten one of those letters. They are actually in the process of sending thousands of letters notifying taxpayers of the disallowed ERC claims, even after the fact that they were paid. It is an issue. You do need to get somebody that's involved to help you understand this letter that they're sending out, 105C, for the disallowance and the collection of money that they may have already paid to you. So if you've gotten that ERC credit and you've gotten the claim and you've gotten the money, I'm of the thought that you need to take a proactive approach to looking at and understanding whether you truly qualified. And so if you've used one of these promoters out there, and we've seen some of these promoters that really hit hard on trying to get you to qualify. I mean, even my business, who never shut down, revenues increased. We continued to work hard all through the pandemic, and they've come to me and tried to get me to get an ERC for my business. And I'm like, look, I've already done the analysis. You can't tell me I qualify. I already know I don't. Oh yeah, everybody qualifies. No, they don't. So if you've gotten an ERC credit and you've gotten a refund and everything, take the time to understand and work with a tax preparer, work with taxationsolutions.net to determine whether you should have gotten it. Be proactive. Don't let the IRS come back and hit you with all the penalties and interest and fraud that they're going to hit you with, if you did this and you shouldn't have gotten it. So, we've gotten questions over the time of what is the 1099K? I get this from people all the time. They receive the 1099K. Well, when you're in business and you're accepting credit cards and stuff, you're going to get a 1099K for the payments you've received. It's payments on, collections on credit cards and everything. And what's really interesting is I have seen it now more and more, where now the IRS is now starting to compare the 1099K to the tax return. Had a client come in the other day and their tax return was getting audited because their Schedule C, which they didn't do, okay, we'll be honest here, didn't match the 1099K, and they're now using the 1099K for total revenues. And there's notations that they would also be adding a percentage for cash and check collections over and above the 1099K, which that means the IRS is just assuming that because you're accepting credit cards, you would also be taking in payments in cash or payments via check. And so they were adding that as well. So if you're in business, something you need to kind of look at, and whether you're filing a Schedule C, whether you're filing an 1120S or 1065 or 1120, take a look at how much your credit card company is saying you collected via collections through merchant services which would be on that Form 1099-K. Now, the other thing to look at your 1099-K is who is it written to and what taxpayer number is it? Is the taxpayer number your Social Security number? Is the taxpayer number the employer identification number and the business? Which one is it? See, we've seen at times these 1099-Ks get issued, and the 1099-K should have been under XYZ LLC and with an employer identification number, and instead it's written to Jim Bob's Moonshine, and it is under their personal Social Security number. So the IRS is looking for these transactions on your personal tax return versus looking at it on a company return because of how the 1099-K was issued out there as well. And so, these 1099-Ks are usually only issued when you've received more than $5,000 in payments for goods and services and stuff. So, kind of be aware of it. Look at all the forms that you do receive, whether it's 1099 miscellaneous, 1099 NEC, of course, the 1099-K or the 1099 DIV, your brokerage statements, W-2s, all these things, matter, including the 1098 for your mortgage interest, property taxes, and everything that goes on from there. The one thing that we are seeing with the IRS, these 1099-Ks, the IRS has kind of phased in now implementation of reporting thresholds, implementation of reviewing tax returns and documents that the IRS is receiving to compare to taxes. Interesting story about this. We've had clients that have come to us and, somebody's going through an audit, and we actually had clients that reported everything that would have been on a 1099-K merchant services, and they got audited because the IRS assumed in their business they were also taking cash payments. And so they imputed a value for these cash payments. And, the value out there was too great of a number, but we had to go in and prove to the IRS that their business was strictly through merchant services. They took no cash. They took no checks. They only received credit card payments, and that is the only way they got paid. And, some big hurdles to get over there. But if you got good record keeping, good bookkeeping, you would be able to prove that, hey, this was the only way we took payments. And then making sure that no matter what you receive in, that if it's business, it got deposited in the business account. And if you move money from business to personal or took payroll because you're a S corp, you're able to dot the I's and show the transactions going back and forth between business and personal. And any extra personal money that came into the account, you're able to document as well. So you really want to make sure that you're dotting the I's and crossing the T's when you're in business. It's a fun thing that we get to do, in our opinion, dealing with the IRS, because we like to beat the IRS, and that's where we see the fun. When the IRS is coming after you and we can prove that the IRS is wrong, it benefits you, it helps you, but it also shows that we're able to support it, beat them, and win on your behalf against the IRS. And, we kind of, like the old flat guys, when they shot down the German planes, they put the X's on the side of their planes for every plane that they shot down. It's the same thing we get to do here. Is we get to chalk up another great mark that we beat the IRS, whether it's penalty abatement, whether it's winning the audit, whether it's offering compromise or a partial pay installment agreement. We get to take that and show that we are the winners. We're the ones that got the best of the IRS, and do things the right way for our clients in making sure that they got the best settlement possible out there. Hey, we're really into trucking, and some of the things that we've seen in the trucking industry and some of the scams that we see pulled on truckers and pretty much every taxpayer that's out there. And we're going to talk about that right after we come back.
We have only scratched the surface of today's show. Please stand by, as Barry G. Fowler will be right back with Tax Talk for You. As an owner-operator, you already spend too much time away from your family. Stop spending time doing paperwork. Go to truckertaxtools.com, a solution built specifically for truckers. Truckertaxtools.com makes your life run smoothly. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. Scammers are everyday thing for you and I, and people in trucking at truckertaxtools.com, where we help truckers. We hear about scams every day, and talking to owner operators that are out there on the road, and sometimes they fall as good prey to go after. But it's, everybody could be involved or be hit by some of the scams that are out there. Some of the scams that we see in the trucking industry is people that tell them they're going to get the largest refund, but they know nothing about trucking, and they do their best, but they get things wrong, or they overstate, or they try to do things that are incorrect, like promising them a big payday, big refund that nobody else can get them. If it sounds too good to be true, it probably is. Bad tax advice, whether it's social media, whether it's owner operator, truck stop, fuel pump, bookkeeping, or tax, it doesn't make it right. Sometimes they try to convince you to lie on your tax forms, or mislead you about credits that you can claim, or mislead you about how to claim your tractor or your trailer, and that you can take mileage and fuel. It doesn't work. But if you need good advice, then go to truckertaxtools.com. Let us get you some good advice. Get a free consultation from Trucker Tax Tools by calling 877-996-2477. It's a great way to find out, is everything correct. Now, you're out on the road. We've seen this. And you're a trucker, and you get phone calls. You do answer them. Sometimes it's an impersonator saying, "Hey, pay now, or else." They're going to threaten arrest, deportation, repossession of your foreclosure on your truck, or your tractor, your trailer. And you don't get a chance to question or appeal the amount of tax they're saying you owe. You got to go do this now. got to watch out. This happens, every day, on a daily basis, of people impersonating the IRS, or even some of these resolution companies that are out there telling you you owe money, and you don't, but all of a sudden you've got the threat of owing money. If you think you do and you're not sure, give Trucker Tax Tools or Taxation Solutions a call, and let's see if you really owe money. We can do a transcript analysis that does analysis of everything for the last 5, 6, 7 years to see, is there money owed? Is there problems? Maybe you've been using one of these bad tax preparers and you've got your tax returns all wrong, and you need to have someone fix it. That's where the problems could lie, for you. So, check it out. Make sure that, somebody that's impersonating the IRS or a resolution company calling and saying, hey, you've got to do this or you've got to do that. It's got to pass the smell test, to make sure that, what you're doing is right. Another big thing we see is, them coming to you and trying to get you to claim some fuel tax credits that you may not qualify for. They basically, are trying to get you to go after these fuel tax credits that you're not going to qualify. There's been a huge increase in fictitious claims for these credits. Promoters out there are, again, looking for their own financial interest, charging you inflated fees, but charging you fees that, you're not going to get back if they're wrong. They have no skin in the game. If they're wrong, they're pushing these claims on you on an accelerator race. It's kind of like, you hitting the accelerator and getting down the road, or they're driving you to that bad choice. And, they frequently are going to charge large fees on it. The fuel tax credit's actually one of the dirty dozens that the scams that the IRS lists out there. Do you know whether you qualify or not? I'm pretty sure you don't. And, if you're not sure about it, call us at Trucker Tax Tools. We can talk about it. And, we screen for this and make sure that when you're going to claim that fuel tax credit, you're going to claim it the correct way and not fraudulently claiming these credits out there. We've seen also in the trucking industry where not only are they going after these kind of tax credits, but they're claiming things incorrectly on the tax returns, such as per diems. They don't get those right, or they're claiming both your travel meals and the per diems. We've seen that on the tax returns. That causes you problems. For a couple of years, the IRS allowed 100% write-off of the per diems, and we're back down to 80%. Or they're calculating per diems incorrectly for you, and you need to get those calculated correctly so that the IRS isn't coming back and auditing you because you claimed too many nights on the road away from home and not the half on the beginning and the end of your trip. And then they're still claiming it at 100% because they don't know any better, and it makes them look good. So those are some of the things that you've got to watch out for as a trucking owner operator out there. Or if you're a W-2 truck driver, that they're trying to find a way to still claim per diems for you. You can't, as a W-2 trucker, claim per diems where don't file Form 2106, which is unreimbursed business expenses that your employer doesn't pay you for. And, they're still trying to make those claims for you and filing it under other expenses or filing it under Schedule A. We've seen all kinds of things happen out there just to make themselves look good and at your expense. Maybe you're a trucking business or a small business that they're going to claim that you were in a disaster zone. Just because you transported goods into the disaster zone does not qualify you to be in the disaster zone. And it doesn't qualify you necessarily for disaster assistance for your business or you personally. So, you kind of got to watch these things in making sure that you're doing things the correct way and not just the way a promoter wants you to do it. Now, remember, your tax return is your tax return. It's not my tax return. It's not just your wife's tax return. It's you and your spouses if you're filing jointly. If you're married filing separately, it's your return. If you are single or head of household, it is your return. That signature line at the bottom, read it. It's under penalties of perjury that you say, hey, this return is correct. So the IRS doesn't hold anybody else responsible for this return except you. Now, a paid preparer who makes up a business that you didn't have and puts it on the tax return, or makes up some other stuff and puts it on the tax return, they may get held responsible for preparing fraudulent returns, especially if they've been doing this and do this for multiple clients across the board. They could get held responsible, lose their license, lose the right to prepare returns and everything else. But at the end of the day, the refund came to you, and you're going to have to pay the money back to the IRS for that fraudulent return. Hey, I tell everybody that we prepare returns for. We dot our I's, we cross our T's, we do our due diligence. We ask probably too many questions, according to our clients, about taxes when we're preparing it, making sure that things are correct, making sure that you have the right to claim the child, because the IRS requires us to do a due diligence for, I guess I'm for the IRS, but we do our due diligence for ourselves because we don't want to lose our license. Do your due diligence, review the return. If you see a Schedule C in your return and you don't have a business, don't do business with them. Cut and run. Even if you've paid them, cut and run. Get out of there. Make sure that both you and your wife or you and your husband sign the return. Review it and sign it. It can't be e-filed until you have signed that return. Make sure the money has been direct deposited if you get a direct deposit refund into your account. Those are little things we can tell you when you're going through and looking at your return. Hey, we always love doing the show. It's Mondays here at 10 o'clock Eastern time, right here on Talk 4 TV, W4CY Radio. And of course, you can find us at taxtalk4u.com. Check us out on our Facebook page, as well as taxationsolutions.net and the Facebook page for Taxation Solutions Tax Relief. and even Trucker Tax Tools. But make sure you subscribe at Tax Talk for You so you don't miss any episodes, and find all of our podcasts from the past right there. And we'll be back next week. Have a God bless, glorious week. Whether you're in trucking, business, or personal, have a great week.
Are you an individual or business that wants to understand taxes and how they affect you? Are you looking for specific tax advice for self-employed, business owners, and truckers? Are you behind on taxes and your bookkeeping? Are you dealing with the IRS and ready to have some relief? Then you need Tax Talk for You, hosted by tax and trucker expert Barry G. Fowler, EA. Tune in 10 a.m. Eastern Time every Monday right here on W4CY Radio and Talk4 TV. Don't forget to check this and past episodes at taxtalkforyou.com. See you next week at W4CY.com.